Let's start with Starbucks, right? So this one is all about the coffee, and it also has all of the boulangerie stuff as well. The stores are predominantly in the United States of America, of course, but it's also big in Europe and very big in China. I was in China in the course of the last year, and I can tell you they do Starbucks very, very well there, and it's a real sort of premium product that people are excited about showing off, about consuming. Market capitalization, $85.14 billion. So pretty big. Certainly enormous by our standards, but not quite as huge as McDonald's is, which would be over $100 billion, and not as big as some of the mega corporations like your Apples and Facebooks, but still pretty, solid operator.
Solid chunk of change, right?
32.2 price to earnings ratio, high-ish. Dividend yield 1.39%. So tell us, what do you think about these guys?
It's not a bad business, I don't think. There's a couple of things that stand out. Same-store sales is down for the first time in something like 25 quarters.
In the US?
In the US, correct.
Same store, because they're opening new ones, but you're talking about the measure year on year.
Same store, yeah. This store has been around for the last couple of years, and quarter-on-quarter sales growth is declining, or slowing down at least. So it's still positive, but below 5% for the first time in some 25 quarters. So it's coming in at about 4% versus what was expected at 6.5%. So it shows that it is slowing a little bit. They're making some changes to their loyalty program as well.
They mentioned that in the recent results. So they made some tweaks which they thought were sort of created some one-off shifts. Because the loyalty program sits alongside the mobile ordering thing as well. Their best customers are those that order stuff regularly, get mobile points, and then pick up stuff in store, having initiated on the way.
So you would get free coffees and things like that if you, the rewards program used to work on a frequency model. So the more often you go, the more rewards you get. Now, however, they've moved it to a value-based model. So the more you spend, the more you get back.
So it's created a bit of confusion, because some of the core customers know that stuff, so they customize their behavior, which of course is what the company wants.
Exactly. Yeah. So now this, I think, might have some impact on the sales growth, the slowing sales growth. Nonetheless, I mean, they still added some 300,000 new loyalty members in the last quarter, which is phenomenal. And what people are now doing is, you can preload your Starbucks card with cash, so that when you just go into the Starbucks card, you use it like a debit card. And they're sitting on around $1.2 billion worth of cash loaded on their loyalty system.
Thanks for coming. And in fact, speaking of thanks for coming, I mean, what I noticed about, again, being in the US about a month ago is the Starbucks are full, very, very full, but the ordering and the processing is very efficient. So quite a lot of people don't even go in the queue and order. That's because they've ordered on the mobile app.
Correct.
That Starbucks mobile app, and of course that's linked to your card and you've done all the scanning and it just goes away. That promotes extra sales because people don't like to handle cash. It speeds things up a lot, and it's a huge benefit for the store compared to their competitors, because it just makes everything so much easier.
It has inadvertently led to some complaints as well, because what's happening is, because the management now feels that they can streamline the process, they've optimized the shift structure of the baristas, which means that there are less people working, and unfortunately this is leading to longer queues.
A bit of pressure. Speaking of the baristas, one thing I noticed about Starbucks is, compared to some of the other fast food type operators, they pay better salaries and they have far lower staff turnover. That's got to be a good thing. You get free college tuition if you're a Starbucks
that
employee.
I didn't know.
It's like online free.
Okay, that's
for
fantastic.
University of Arizona online course or something.
I didn't know. That's great, actually.
It's quite a big issue apparently, and it helps retain staff, so they have lower turnover.
And I mean, in the US there is a giant problem with study loans and debt.
And you can tell, I must say, when you go into a Starbucks, the sense you have of the people serving you are of a much higher quality than you would, for example, if you went into a McDonald's store. Okay, let's have a look at the share price, because we're waffling away here like there's no time constraint. It hits 58, 59, 60 into the early 60s at the end of 2015. Since then, it's gone a little sideways, but I guess that's kind of what the market's done, huh?
Yeah, the market's been really tough over the last 2 years and not really gone anywhere.
Howard Schultz, CEO, relatively bullish but very well-regarded business person. I mean, I like these a lot. For me, this is a global growth story. It's coming to Africa. It's expanding in China. It's got all of the right attributes. I'm hot on it, but I'm getting a sense you might be feeling a little bit frappuccino about this one. No?
The chart does look very bullish, yes. I just think that perhaps the business it's trying to expand internationally, but it might be a little mature, and I think there's better growth opportunities in the next company we look at, actually.
Okay, good. So we've got one hot, one not hot.